our channel. This week on the Property Queens, we are talking about closing costs. We have Jackie here, and she will be breaking down what goes into the closing costs, what fees, prepays, all of that is, and let her take it away.
Roll with it. I know this is everybody's favorite topic. Right, Sasha? Yeah. So I think when borrowers come to me, I work with a ton of first-time home buyers. I think they don't realize, or a lot of them aren't aware, that there are closing costs involved when you're financing a property. I think a lot of people think that you just need to come to the table with your minimum down payment, which, as we've discussed, if you're purchasing a primary residence, that's typically 0 to 5% down. But you do have to factor in the closing costs and prepaids that are required when financing a property. So I just kind of wanted to run through them and give you an idea of what you could expect. I did this for a sales price of $300,000, single family home. This changes dramatically from state to state, and even within Tennessee it can change dramatically from one county to another. So this is just to give you a general idea of what to expect. The first closing costs we're going to talk about are lender fees. These can range anywhere from a couple $100s up to about $1,500. You're almost always going to see cheaper lender fees if you're using an online lender, but keep in mind that you pay for the service. So yeah,
you get what you pay for.
You get what you pay for. If you go to court, you're not going to go and look for the cheapest attorney. You're going to look for the attorney who's going to get the job done for you. So just keep that in mind when you're shopping. Lender fees, at most, you're going to save maybe a couple $100s on the biggest purchase of your life. But you could also be getting into a worse loan program for you. So just keep that in mind. Saving a couple $100s over a 30-year span isn't really a savings if you're in a terrible program or you're not working with a lender who's really doing the best for you. Keep that in mind. So those are the lender fees. Then you're going to have an appraisal fee, which we talked about in a previous video. These can range anywhere from like $400 to $600. These are random, appraisers are randomly assigned to each home, so the lender does not know exactly what that fee is going to be. They disclose that up front, and like I said, it's going to be anywhere from $400 to $600, but it's going to depend on which appraiser picks up that property. Credit report fee can vary anywhere from about $30 to $50. The lender is only going to charge you what it actually costs them to run your credit. Tax service fee, so you're going to provide tax returns, 1099s to us, and we have to order transcripts from the IRS just to match it up and make sure that what you provided us is what you actually filed with the IRS. So they charge for that. That's $110 roughly. These are all going to vary a little bit depending on lender. And then a flood search typically ranges from about $11 to $15, and you pull that to see if you're in a flood zone or not. If you are in a flood zone, you will be required to get flood insurance, so just something to keep in mind. And then you have all of the title fees, which Sasha's going to kind of help us out with.
Yeah.
Take it away, Sasha. Literally, take it away.
So one of the title fees that, well, we included as a title fee, but technically it's a lender fee, is a closing protection letter, a CPL. Usually it's just $50, and that's just something that the lender requires. Some lenders don't require it, but either way, it's $50. Title expenses, that's going to depend on what exactly the home is. If you want to do a rough estimate, it's about $2 per $1,000. So it really varies. Owner's title insurance is separate. That's what you are getting to cover title for yourself. Your lender will also require it, and it's lender's title insurance. So those are two different fees that I can't really give you a general estimate because they range from, $1,000 and up. So.
It depends on the value of the home.
Yes. Title search, that really depends. Ours is kind of just combined with our settlement fees, so you're not going to pay for, if you're in Davidson County, you're not going to pay a settlement fee of $450 and then also pay $175 for a title search. That's all included together in our settlement fee. If for some reason you are in, I don't even know, Coffee County, Tennessee, or some random place that we actually have to send a different title searcher or examiner out, that's a separate fee, and it'll be $450 plus that other fee. So you're looking at maybe like $600 if you're outside the main 4 counties in Tennessee. And obviously, if you're in a different state, your title company that you use is probably going to have something similar where if it is a county that they work in regularly, they can probably back the search fee out of their fee. But if you're in like a rural area and they have to send someone out to check the records themselves, that's going to be a little bit more money. And then there's going to be the recording and transfer, which is conveyance taxes. Those are also going to vary based on the lot, how much your county wants to tax you, or if you have city fees as well. So those are all separate, and usually if you're a buyer, you're going to pay the recording and conveyance, and if you're a seller, then you're going to pay for the title. But for example, I just had a client in Georgia, and it swapped there. The buyer pays for title and the seller pays for the conveyance. So it might vary state to state, but hopefully either case you pay one or the other, because in the end they kind of even out.
And then just to give you guys an idea of where these come in, this was for sale price of $300,000, FHA 3.5% down. So closing costs are somewhere around $6,300. And then jumping to prepaid items, you pay interest through the end of whatever month you close in. So let's say you're closing middle of July. You pay interest through the end of July. You actually get to skip August, and then your first payment is due September 1st. So the earlier in the month you close, the bigger your interest payment is going to be at closing, but the longer period of time before your first payment is due. But just keep in mind that interest is paid in arrears with the mortgage, so you get to skip the month after you close, and your first payment is due that following month, which is a nice little treat after you bought a house.
Also for taxes, those will also be prorated, so you're not paying like the full month of taxes, and then the seller is going to get away with, not paying anything. It's going to be prorated to the date of closing, all the taxes. Perfect. And HOA fees as well.
Perfect. And then homeowners insurance, 9 times out of 10 you're going to be escrowing for both homeowners insurance and property taxes, which means that your mortgage servicer is collecting for those each month in your monthly payment and just setting that money aside in an escrow account, so that when those payments come due at the end of the year, they can just make them for you. So it's essentially forcing you to save for property taxes and homeowners insurance. So upfront at closing, you're gonna pay 1 full year of your homeowners insurance policy so that you're insured for that entire year. And then we're going to collect roughly 3 months of taxes and 3 months of homeowners insurance in addition to that full year, so that we can pad that escrow account with some money in it. And those are all called prepaid items. So in this estimate, it comes out to about $2,300. So total, you're looking at estimated closing costs of around $6,300, and then estimated reserve or estimated prepaid of about $2,300. And I know that sounds scary right now, but I have a borrower who's closing tomorrow, and she's paying absolutely nothing at closing because the agent was able to negotiate and get the seller to cover everything. So that's definitely an option. There's ways to get these closing costs taken care of, either by negotiating with seller, or sometimes you can take a little bit higher rate and get them covered by the lender. There are different options.
Exactly. Just make sure you ask your agent, if you're not using me, make sure you ask your agent, but you should, to roll your closing costs in your offer when you are putting in that offer, so that is completely a stress-free thing for you.
Yeah, and then you just have to go to the table with your minimum down payment.
Yep. Exactly. Well, thank you guys so much for tuning in again this Tuesday. We look forward to seeing you next Tuesday, and we would love some feedback. If you guys have any topics you would like for us to cover, make sure you comment below, anything at all. If you have any questions on any videos we have covered up until this point, even on this video, make sure you message us, let us know. Till then, we will see you next Tuesday. Bye.